Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, Mike Alfred's back with us. He's the co-founder and CEO of Digital Assets Data. We're going to take a look at data trends in the crypto market and the super hot topic of Bitcoin set to halve in May. Mike, it's great to have you back with us as always. And before we get into the halving effect, I think that's something we'll be talking about a lot going into May. Let's talk about what's happening right now, the January effect between crypto and traditional markets. Are you seeing anything there?
Just a small bit of correlation, right, with gold. And I think, people are calling it a macro asset. I believe it's showing some signs that it could be a macro asset that affects the whole world in the future. Today, correlations with oil, with gold, with the dollar are sort of loose at this point. So it's not something that we're calling out to clients, to pay attention to.
All right, let's bring up our first chart here. The halving effect of Bitcoin. Explain to us from start to finish what exactly this means and the potential impact to the price.
So there's been two halvings in Bitcoin's history over the last 10 plus years. The first was in 2012, as you can see here. And for most of the year, there was no real impact. Keep in mind, it was a much smaller community of people trading the asset then. But over the full year, you can see a significant effect here where the price actually finished close to 10 times more, right, or more actually than where the year started, right? In 2016, in the second halving, and again, this is a cut in the supply that's available, right? So the miners earn rewards as they confirm these transactions. And in the first one, it was from 50 to 25 Bitcoin. In the second one in 2016, it was 25 to 12.5. You can see there was a little bit of anticipation, right, for the halving event, but for the full year, again, a significant increase in price. The halving is projected to happen this year around May 13th, right? So it's about every 4 years. And I believe it's going to be an extremely bullish year for Bitcoin for a number of reasons. But I don't think the question of whether it's priced in now is the important question. Right. The question is, what is the price 2 or 3 or 4 years from now based on the fundamental demand drivers alongside the cut in supply, which I think is obviously fundamentally bullish.
And that's my question to you, because more people are exposed to what Bitcoin is. They have a remedial understanding of the asset itself. Certainly financial media is going to be covering this. Is it the most obvious trade, or what if nothing comes out of it?
The question again is, are you a short-term trader, right? Who only care? Like, that would be like asking a short-term trader in 2002, is Amazon's growth in 2005 priced in? Like, who cares, right? What mattered was, did you have the guts to buy it for fundamental reasons and hold it for multiple decades? I think Bitcoin could end up being significantly more important globally than any other company, right? Or any other idea in history. And so if that's the case, do you really want to be worrying about whether the price today reflects some halving event in a few months? I don't think so. I think you want to be focused more on what the long-term fundamental demand drivers are and whether you should be buying it at this price. Like, if you don't own a Bitcoin today, I view that as a huge mistake.
All right, let's talk about this more on a higher level, the rise of decentralized finance, and that's really, the theory behind why Bitcoin's going to be an asset class that's here to stay. What exactly is decentralized finance, and why are we seeing such an increase of interest with it?
So it's more of an open, permissionless financial system. So as you know, if you have a bank account today, the money's really controlled by the bank. So if you want to send it, you've got to follow government regulations, you've got to follow government rules. If the government at some point decides they don't like you, let's say, God forbid, you live in Iran or you live in China and you get on the wrong side of the government, they can seize, right, that money from you. So a lot of the value of Bitcoin and then other DeFi protocols is in the decentralization and the true open permissionless nature, which means that I can decide with my own money what I want to do with it, and I won't be interrupted by somebody who disagrees with me, right? And so if I want to do a transaction with you, should I have to ask the government to do that? That's the value of DeFi.
Yeah, I mean, it's really interesting. At the end of the day, if you think about it, you wouldn't even need a bank or broker to trade. Why not just buy stock from the exchange?
That's
right.
Exactly,
why not just transact money? Why do we need a bank for me to transfer money to you?
No bank, no broker, no government entity. It gives you full control over your money.
All right. Now, the number of assets locked up in different DeFi protocols, why is that happening?
I think that's happening, honestly, for now, because people are experimenting with the platforms, right? It's an unusually small number of addresses that are doing the vast majority of the transactions. We believe that will grow pretty dramatically over the next decade, but today it's still sort of like Bitcoin was in 2011, 2012, 2013. It's mostly a hobbyist, and it's sort of something for people that are very technologically sophisticated. You're not seeing, the average 50 or 60-year-old recent retiree interested in locking up their Ethereum in MakerDAI, right? So that's not something that we're seeing happening, but we are seeing a lot of the early adopters embracing this trend and getting on board with the technology.
Yeah, but think about it though, direct deposit is not something that older people would have done even 20, 30 years ago.
Right.
That was very technically advanced. It's almost the same thing. Why do you have to have certain intermediaries when you don't need to go to the bank to cash your check?
It's just like the internet in the late
Yeah.
90s where, you know, most people got on with AOL, right? Because it was a safe way to onboard the world onto the internet. And most people still ask them, why would I need this? Why do I need to send an email to someone? Today, they couldn't live without it. And I think Bitcoin and then decentralized finance more broadly will be the same thing a decade from now.
Right.
And again, huge mistake. It's going to be an amazingly bullish year this year. It's a mistake not to own at least one Bitcoin, right? And my view is at least 1 to 5% of your net worth should be in this asset class.
Right, and even if you can't afford, you know, Bitcoin at whatever, you know, 8,000, 9,000, whatever level it's trading at right now, even to just get a fraction and understand how the asset works, so what the range is, how it trades, there's nothing wrong with that. It's available to everyone now.
100%.
All right, thanks, Mike, as always, for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.